In this video series, we're going to walk through a strategy that almost anyone could implement in order to achieve $1 million net worth in around 10 or 11 years. I previously walked through a little bit slower and lower funding level for this strategy, but this one we're funding a little bit more aggressively, and we'll also compare it to what you'd need to do in the markets and what kind of returns you'd need to have to achieve a similar net worth. Check out this video series in the video description. I'll have a playlist, or up here is a link to it. So in this analysis, one thing that I'm walking through on the spreadsheet is the concept of forced appreciation, as I mentioned. So forced appreciation is effectively where you put some work into the property in order to force it to be worth more. And this is very common. How do flippers make money? It's through forced appreciation, and that's what we're talking about here. So understanding what kind of improvements are going to increase the value of a property, so that you can have some forced appreciation. So to some degree, this strategy is somewhat reliant on this, but it's not. If you're not as successful with the forced appreciation, it might just slow your progress a little bit. But ideally, we're going to be walking through some pretty good numbers with this, and I think it's realistic numbers if you can learn what you're doing. If you're wanting to do some deeper analysis on how you might get forced appreciation, what types of things would help with that, drop a comment below. Maybe I can do a follow-up video on how you can be most effective with your forced appreciation. I'm not going to go too deep into that, just covering the concept here in this video. Make sure you watch the rest of the videos in this series, but if you really want to know the secret to success, you're going to have to watch through this whole video. So I have a previous video where I walked through becoming a millionaire in 17 years with $33 a day or $12,000 a year. So this is a higher funding level. Realistically, you could fund it you could fund higher than this. You could, if you had more to save, you could be a millionaire much sooner. But we're just walking through an example here, and I think this is a realistic example for somebody who maybe discovers the F.I.R.E movement and comes out of college with a decent amount of salary income. So we're looking at in this scenario, we're looking at putting $36,000 a year into this policy for 20 years. The year one cash value that you have access to, so if you needed to use it for whatever reason, year one you have access to $31,000. You don't have access to that full amount. It's about 90% of that amount that you'd have access to, but this is your cash value that you'd have in the policy. So you have access to a good chunk of that amount that you're putting in, and that's when we design the policies the proper way. This is what we would reasonably expect. So don't go to just any insurance agent out there and think that you're going to get a policy like this. This is designed for maximum cash value, minimizing commissions. This is the only way that we design policies. It's how my policies are. I'm putting significant amounts of money into insurance policies. I don't want anybody paying crazy high commissions. Don't pay crazy high commissions. We minimize the commissions in order to maximize your cash value when we're designing these policies. But all that said, 20 years, putting $36K in, and in this illustration, actually converting this into what maybe like a pension at that point, and taking what could be, this is all tax free. So this is after in year 21 of this policy, we've illustrated this so that this person at age 43 could take out $145,861, almost $146,000 a year for the rest of his life, and this illustrates it until age 120. So this is a realistic scenario that could be done with a properly designed policy. If you made it this far, then you will know that you just need to throw all of your money into Shiba Inu and drop a dog emoji in the comments. I'm just kidding on buying Shiba Inu. You can do that if you want, and who knows whether it's going to go to the moon, but I am not recommending it. Do drop an emoji in the comments though, and I will respond with something special. Check out the video description or top comment for a link to the series playlist. You can also find our playlist with content to help you on your path to financial freedom. This November will be the 10-year anniversary of leaving the Army infantry without a college degree and no real plans. I've learned a lot about how to earn, keep, grow, and protect more of my wealth. This channel is intended to share these lessons learned. If you're interested in unconventional wealth growth strategies and how to multiply your income quickly, then hit that subscribe button to join me on this journey.